All right, good morning. Right on time today. That's great. Take off these. I don't need my headphones on anymore. Welcome everybody for joining. First thing first, I am definitely going to have a sip of coffee. We made it over. We made it over the hump yesterday. We made it through. We made it through the rate announcement. Market's still reacting to that. If you've checked everything, but so volatility ahead, I think, is going to be the name of the game for the next maybe little bit till things sort themselves out. We'll see. We'll see how it goes. Haven't made any changes or didn't do any purchases any today. Payday is tomorrow though, so I will keep an eye on things. Let me grab a sip of coffee first. First things first, and then we can say good morning to everybody. We've got a few people watching today, checking in. That's awesome. Welcome, Jason. Hopefully you got your coffee too. And Stan's back. Stan, good morning. But we'll leave a few minutes to go through and see if people slowly are waking up. I'm not looking forward this year to the time change coming out. That's for sure. It's gonna be dark. It always hits you the first time. So this weekend, right? Time change, but it's I guess we'll have to get used to sun going down at 4:30, 5 o'clock. Sharma, good morning. Welcome back. Great to have you here. Lots of people here today. That's awesome. Thanks for tuning in. And KY fist bump. Welcome. First time I think on the channel saying hi. So welcome. Good group of people here. Feel free, shoot out any questions, comments. What's on everybody's mind today? That would be, I guess, the main thing. What would be everybody's how you feeling after yesterday and coming into today? What's everybody's, I guess, what's the sentiment, everybody? If we're looking at, if we do look at the market today, it's definitely as we saw as we finished yesterday was doing well, right? Kind of, and then the announcement came out and came down. Just in terms of basically thinking rates are still going to continue to increase. But as we were kind of talking about that, it was almost kind of saying it is one thing, whether it will happen is another. Oh, and over a year now. Well, thank you. Well, that's great that you're a subscriber. I really appreciate, obviously, everybody that's subscribed over a year. Awesome. Thank you. And it's nice to see you jump on a live stream and say hi. That's kind of why we do these, just to get a bit of engagement with some people. Obviously, I can post videos all the time, but and try and answer everybody's any comments or questions on videos. But sometimes it's good just to kind of jump on and be able to answer things that you have on your mind at the time and give a bit better explanation, I guess, kind of some things. And there's a lot of great people in the chat that can give a lot of some smart info as well, that always seem to jump in and correct me or send us in the right direction for different things. So definitely appreciate it. And if you watch, like you said, if you're watching my videos, that is awesome. I really appreciate everybody every view. It's great. I guess on that note, the channel keeps growing. It seems to, I've said it before, but it's interesting because I think it follows, subscribers follow the market. And I think if the market is kind of, kind of, obviously we're down and stuff like that. And it, as the market kind of starts to kind of increase a bit, the views start to kind of go up, and the subscribers kind of go up in lockstep with the market, which I find super. It's interesting. More people interested, I guess, in investing when it's going up than as opposed to going down, or it should maybe kind of be the opposite. This, I guess, I'm kind of thinking it's a good time to continue to dollar cost average is our friend, right, at this time. And that's a great question from Sharma. When I make a deposit, how do I decide which stock to add to? So there's two things I do now. So when I receive if I receive a dividend, and just as a follow-up part before I get into it, you feel like you overthink what you add to. Yeah, that can be definitely, I do too sometimes, overthinking. But I've kind of do two things. The first one is obviously the ones that pay a dividend, and if they're available as fractional shares, what I do is when I receive the dividend, I'll put that right back into the same share. So for example, if VDY pays the dividend the same day I get the dividend, I just buy a fractional share with that amount. That solves that problem. So that obviously gets reinvested back in. That being said, not every share is fractional. So if I do get a dividend in, what I'll do is typically, like, say for example, I have TransAlta Renewables. There's not fractional share. So I will usually try to, if I've got some extra money, is get enough put in there to be able to buy, at least buy one share. With that's not always possible. So what I'll do actually then is put it in something like, in that case, I would put it in something like probably something similar, like a possibly, usually my default would be like probably putting it into the S&P VFE if I have a little bit extra funds left over. That's how I do that. In terms of what actual, like if I do like $100 deposit, I kind of look at where my, like the percentages of my holdings and where they are. And what I do is I kind of want to keep, I'm kind of where they are is the percentage amounts of, if that kind of makes sense. So I don't want to be over, I don't want to have everything in. I don't want to keep just putting money in. For example, let's just say VFE. I don't want to put all my deposits in there. But if I see, I've done, like, one example would be BTC.Y. I kind of want to keep about 5% of my portfolio in like digital, like Bitcoin, that kind of class. So I kind of look at that. So if one is kind of dropped a little bit lower, I'll look at bumping that up. It'll also kind of have to do with a little bit on, if I'm looking at price, like for example, like if Telus is, if it's coming up and I'm set to kind of do, and I typically do deposits like every two, like it's kind of every 2 weeks generally. Or what I'll do is I'll split, like, because I kind of time it with paydays, but sometimes what I do is I'll maybe do half on 1 week and half the next week. So if I put $100, I try and put about $200 a month in right now. And I'll maybe take $100 and then add it to a position. If I see and then if I see maybe there's a certain day, maybe because I've allotted kind of some savings in the back end to be able to move in there. If I see possibly like something that I want to pick up that maybe is I feel is a decent price, like say Telus, for example, it's kind of come down and I'm like, it's maybe an opportunity to average down the cost a little bit for whatever reason on that day, I'll add it to that. I try not to overthink it, other than thinking more of the percentages that I own in it. My portfolio is really heavily weighted on the percentages. If I look at it, it's about 30% is in the S&P BFE, and roughly 30% is in, just under 30% is in VDY, and that's kind of where I'll keep kind of things. Hopefully that helps and answers that question. But it is. I mean, and if anybody else has any suggestions on kind of what they do, it can be definitely that can be hard if you're overthinking, definitely, because you're like, it's so funny. It's such like an emotional and thought market investing on your own. You have that whole, you want to buy more Telus, but the price is down. So do you wait? I know, I understand it can be hard. You can definitely really overthink things. And that's where I find like the ETFs are quite good for that, because there's obviously they're diversified in stocks. So it's kind of like, if you're not sure, you can just fire it into, the S&P, or if you want to put it into the dividend, like the Canadian dividend stocks, which is like banks, financial, energy in there, just put the money in there. And then it kind of takes some of the pressure off of what to decide to. There's also that other, what's the other ETF? Is it XE? I can never remember it. I got to look it up. XEQT. There's also that one you might want to look at, because that's like it's like, it is an equity portfolio. It's been mentioned a lot in the chat. If you have that one, it's pretty diversified. It's like an ETF of ETFs. So covers all your bases. So if you're unsure, it might be something to look at too. Into the individual stocks. That's the hard part. And the hard part too is kind of when to maybe sell them. I have to get a bit better at that if there's something that I notice, and be able to lock in some profits. Obviously not day trade in your TFSA. Actually had that question a couple times on the channel. Might as well answer that. And I think a lot of people kind of know you're not supposed to day trade in your TFSA. It's very frowned upon with CRA. So don't do that. But there's been some questions on the channel, and we kind of mentioned it before, but there's been some questions about when can you sell, and when, what is considered, what is considering too much trading in your TFSA. And there's actually really, I did a bit of research on this, and there's actually nothing on the official CRA website that I could find, although the website's not the greatest to search around, but it doesn't really make mention, there's no certain number of trades or anything like that you can do. But in researching online, and I think it makes sense, is it really is dependent on your portfolio. It's also dependent on obviously the stocks that you do own, because obviously certain stocks are traded more than others anyways. So there's obviously in the back end, I'm sure, if we're on Wealthsimple, I'm sure there's certain algorithms that would probably trigger where they would I'm going to assume they would you would get contacted if you start to do too much trading in your TFSA. And you just don't want to do that, because if you're day trading or you're trading a lot, that's almost like you're doing, it's considered more of a business. I'm not a day trader, obviously, but it's considered more of a business. So there's whole different tax implications for that. But you're fine to, if you have a stock or ETF, if you're shifting your portfolio around, if you want to sell something, that you decide that you want to get out of something for whatever reason, for example, I could use my portfolio for an example. Say I didn't want to have any Bitcoin or digital currency exposure at all in my ETF. I could sell those. That wouldn't be a problem. The thing to be aware of, though, obviously in your registered TFSA is it works both ways, right? If any gains you make, well, we haven't seen any gains for a while, but if there's any gains you make, you're not taxed on it. But you're also, if you do sell and you take a loss, you can't claim any tax loss for that within your TFSA. So that's something to be aware of. That's why it's not good to really have, that's why it's not really good to consider it to be trading like that. If you're thinking of doing it like that, this doesn't make any sense, right? There's no benefit, other than if you're moving, if you think, for example, you can make a better gain somewhere else, that would be the reason you would sell. I guess one I sold last year, I'd have to look back, and the actual date was, I sold one I actually did okay on. I sold Cineplex. It had gone way up from when I bought it, but then I kind of sat on it for a while, and I probably should have sold it sooner. But I sold it and made a little bit of profit on that one, so that was kind of a good one. And I kind of have to do some more of that with some of the other stocks. As things go up, I might kind of sell and take some money and lock in some profits and put it other places. We'll see how that goes. Just don't trade a lot in your TFSA. I forget who asked that question on the channel, but it had come up a couple times. Don't trade too much. That's what the unregistered account's for. And so that's started fishing. Okay, it's been on the watch for a while. Yeah, I like that one. There's some other ones that other people have suggested for sure. I've just been happy with it. It's a popular ETF. Vanguard is really popular. It's probably, I think, between BTC.Y, VFV is probably, if you actually look on Wealthsimple, you'll probably see some other ETF. Like if you go to the top 100, you'll see some top, not necessarily say invest in the top 100 ones that people are trading, but it's a good starting point to maybe look at and research and see what you want to put your money in. Obviously, I think it's a good time probably now to start a position somewhere, because obviously the price, if you're long-term, if it's for a long-term investment, because as you see, prices are down. I've been happy with BEP. It's got all the, it's an S&P index fund. There may be some other ones that might be a little cheaper. I've just found that one, been happy with it. If I look back, I think I actually invested in VTC.Y first and then moved into VFV. I'd have to really double check that, but VTC.Y I've been really happy with too. Great dividends on there. And good morning, Abigail. Welcome. How are you doing? Did you buy anything today? Is anybody is anybody doing any buying today? I guess is always a good question to ask. I don't know. I'm not, but it's always here to but what other people say. And thanks for tuning in, Abigail. Really appreciate it. And Jim Morrison, welcome. I think this is your first comment too. That's another great question. No, you don't want to day trade in your. I don't have an RSP self-directed account. I would assume the policies are very similar in that. I would assume. I don't know. Someone might actually be able to answer that. I know with RRSPs, obviously, the tax implications are different, right? Because you're taxed when you withdraw them. So it might not be as stringent. I don't know. That's a good question. That would be a question. That would be a question for Google or your accountant, or someone maybe in the chat can kind of answer that. But I'm going to assume it's probably similar to. I think it's kind of frowned upon to do any type of day trading in a registered account in Canada. That would be my best guess. That would be my best guess. And Jason, ZSP is a good one. Is that ZSP is going to be a BMO one? I'm going to assume higher volume, 3 billion more in assets. Oh, okay. There you go. Good call. Yeah, BMO has some decent ETFs to look at. And I think people mentioned yesterday, I'm not a BMO client. I used to be as a kid, but someone mentioned, I think in the live stream yesterday, that if you have a trading account at BMO, trades of their ETFs are free, if I'm not mistaken. And yeah, you're welcome. Hopefully I'll maybe send you in the right direction. I think that's what somebody mentioned for BMO, but they do have some decent ETFs for sure. Yeah, I kind of looked yesterday because we were talking a little bit about National Banks that has the free thing, and I started to look at signing up, and it made me realize how easy it was to sign up for Wealthsimple at the time, because I started to kind of look at it, and I'm like, oh geez, I got to do all this stuff. So I put it on the back burner. I just didn't. I was kind of busy with work anyways, so I was kind of doing it on the side. So I have to really look at it a lot closer. But I might kind of check that out just to kind of compare tongue twist, compare things tomorrow between the two. One thing I'm not happy about is Wealthsimple going to be closing down their invest side of their app. I'm going to miss that. It's that much easier, I find, to navigate, to find out things for your other, like on the invest side, on the robo investor side. But I guess I'll get around that. I'll probably have to maybe go towards more the web for that if I do it. I just find it's weird. If you look at it, when you go into the invest side now, it suggests you go over to the app side. But when you go over to the app side and you look at some like more the history of your accounts to find out what dividends and stuff and what deposits have gone through, it opens up like another tab, and it's just not the same. It's just not as intuitive. So maybe they will fix that, but it's kind of like, now I have to learn something, figure something else out. But plus because everything's down, it shows your whole balance at the very top, and you're like, oh, now it just hurts more. It's nice to keep it separate. See how it doesn't look as bad in one place. Yeah. So it's always no perfect app or stream, but I do like the trade. The trade app is decent to use just for trades. I don't really go on the web very much for that, because I haven't been on the web for Wealthsimple for a long time to log in. Yeah. Joe Morrison, I guess, would be a question with your RSP. Do you have a self-directed trade RSP? I don't. For me, I just use the robo investor side. I find it easier because with my RSP, this is something you can maybe look at too. Sharma is possibly looking at the invest side, because it takes a lot of that overthinking out of it, because it kind of does it for you. You set it up at the beginning with your risk tolerances and that kind of thing, what the goals are, and then what it will do is it will divide as you put a regular, as you put a deposit in. You can set it up auto, or you can just do it when you're able to. It will automatically invest your portfolio to to your rate, the ratios of what you're looking for in terms of equities, splits it up, keeps it, and then or rebalance it for you, that kind of thing, all the time. That's something to look at. Although there's a cost, obviously. They charge you, I think it's I forget what it was. It's not very much, but it obviously there's a cost each month for that. If you haven't used that, I think you can use the code. I mean, I have the codes on my videos, but if you know someone that has a code, use their code to sign up if you're looking to sign up for Invest or something. Because I think they used to do it, used to get it a certain amount managed free for a year. So you could give it a try. And Nadia's here. Welcome, Nadia. It's okay. Late's okay. As long as you have coffee. Welcome to the channel. How's your portfolio today? Is everything good? We were just chatting about RSPs and not to day trade in your TFSA. But it's market interesting. I guess market's almost like the weather right now. It's like it's sunny, and then 5 minutes later it's raining. It's like we could have a complete change by this afternoon with what's happening out there. That's for sure. It's definitely volatile out there. I guess we're going to be in that for a while. We've been saying it for a while too. So I don't know why it's not really. I guess it's not really a surprise, right? That's happening right now. So I get how people can be a bit overthinking stuff, right? Because it's tough out there. Yeah, you can always watch the replay for sure. Replays are always posted, and I think a lot of people do watch the replays. Not as many people watch live replays as actually join in live. We've got a dozen people watching. Hello, but usually after the live streams, I think people more kind of skip through and kind of listen a bit more in the background to what's happening. They're definitely, I think, more fun when they're actually live. I know that from watching other people's lives. I don't necessarily jump on and watch as much. You scrub through unless they have a guest or something like that you can listen to later on. But we just kind of hang out and talk about the market. But the live streams are definitely fun. The videos are fun to do too, and I think everybody enjoys the videos. But it's definitely nice to jump on and just kind of see what everybody's up to more. So it's a bit more conversation in live streams for sure. Now, I didn't pick up a ton of news today, but one that jumped out, we always like to kind of grab what's news. Everything in the news today is basically talking about what happened, digesting what happened yesterday with rates and everything else. So it's not necessarily super exciting, but I saw it on Twitter and I can't pull it up, but I found it interesting. And it's I guess I don't know if it's out of the States. Maybe it was the States, but Walmart is making a thing, like it must be the States, because it was talking about Thanksgiving, and I guess they're doing like a basket of Thanksgiving, like a Thanksgiving dinner kind of like sale, and they're charging the same prices as last year to help with inflation. I found that kind of interesting because we always talk about food. Food is inflation. I went on to do like my app with my when I do groceries, I use the superstore, Loblaws, but and I was looking for oranges, and it's like oranges were like $8 for a bag of oranges. I was like, holy cow, things have gotten expensive. It's like it's nuts. So so you just started RSP, Brookfield Renewable, Brookfield Asset Management, holding till I retire. Oh, okay. I also open on through my work through Manulife. Oh, okay, good. That's a good one. Yeah, those are popular. I have obviously, if you following the channel, you would know I have Brookfield Renewables in my individual stocks, and then I picked Brookfield Asset Management for my 1-year challenge that I'm doing. So if you haven't caught that video, you can check that out. Basically, I'll get the video right pointer. There you go. I'm not paying for StreamYard. StreamYard, I'm not paying my $30 a month, 25 US, 33 64 last time Canadian, and I'm buying Brookfield asset management with that each month. I'll do a deposit and see how that goes for the year. That's good. And Manulife RSP through work. That's awesome. Your work offers RSP. I'm gonna maybe they is it one of the ones where they match it. That's pretty awesome. I used to work for a company that was great. I should have never left. That had RSP matching. It was like free money, and it was in what I found interesting about that. There was people that it was either you could sign up for it, and it was a percentage. It's so long ago now, I have to remember what it was. I can't remember the percentage, but it was like a certain amount of your whatever your obviously wage or salary would go into RSPs, and then the company would match that amount each month. And so right off the bat, you're making 100%, like you're doubling your money off that, regardless of what the market's doing. And it blew me away all the time because it was voluntary to sign up, and there was people that worked there that didn't want to do it, and I was just like, couldn't believe it. There was people that were adamant of not wanting to sign up for it. It was just like, people are offering you free money. Why would you not take it? And it can be, it's actually quite substantial. Like that can really add up, free money. Like, why would you not take free money? It blew my mind. And you try and tell people, it was always like younger, it was always kind of some of these younger people. I mean, I get it. Maybe they're like, well, I need the money now or whatever, but it's like, it's free money. So, I mean, they could have, the worst case scenario is they could have taken that money and took it out and paid taxes on it and got it back, like still doubling your money. I just couldn't believe that. Some people, they need to teach better finance stuff in school, I think, for people to maybe understand that. I was actually talking about that with a friend of mine yesterday on the phone, that this is what the schools may be teaching. I mean, I don't have kids, but they need to. If anybody has kids, let me know. I think even when I was in school, they didn't teach a lot of it. Nothing you kind of know. I think they need to definitely probably do a better job at teaching people about investing in credit especially, because you learn it kind of from your parents, and if your parents were not the greatest, you will, I think, pick up their habits, and they're bad. You always pick up bad habits, right? I was fortunate enough that my parents kind of always taught me to at least have, like, going back talking about BMO. I remember as a kid, my mom setting me up. You get the kids account, right, and always having something in there. This is back when they had like passbooks that they used to print out and used to have to put them in. So dating myself, but used to have like those little blue BMO passbooks, and if you did a deposit, they had to pay. They'd open them up, they take the page out, and they put it through the printer, and then it would print, and then they put it in your passbook, so it would have your balance would be typed out on your passbook. I mean, I don't think they even have passbooks anymore, but probably they don't. I know my bank doesn't now. So as a kid, you'd see your savings kind of grow, right? You put whatever in there, your allowance that you got, or money that you made somehow from doing whatever. They taught me that to kind of do it. And I remember starting RSPs when I was, I think 18, 19, whatever age you could start. I can't remember what age you could start. I think 18. And then with, fortunate enough with obviously working, like I said, with, RSPs and stuff like that, being able to do that through Manulife. Yeah. Yeah. And this is the thing when you're young. I mean, you spend, I mean, I did too. Everybody's stupid when they're younger, but you look back and you think, if I didn't spend all that money on silly stuff when I was, because you're living at home, you definitely have more disposable, especially if you're working and you start, and you're not moved out, and you're making decent money and you're not paying much necessarily room and board. You do have a lot of disposable income that gets wasted. So, but I guess it's, it kind of comes to this point. It's a rate to create workers, not internet. But I think with the internet though, and with with the information that's out there, maybe more young people now are kind of starting to do other investing things because they maybe find it interesting. I mean, I do find it interesting. I enjoy it. I enjoy reading about it, kind of learning about it. You don't always make the right investment choices, but that's part of the part of learning, right? But they could definitely do a bit more jobs in terms of, I think the big thing is credit. It's easy to get. People always. I was reading a tweet yesterday about, it was from a car person on Twitter, talking about like how everybody wants to keep up with people always want to keep up with the neighbors with the car, right? The big thing with the car. And if you drive like an old beater, it was kind of like if you drive an old beater worth $10,000, let's say, and have $1 million sitting in the bank, people have the perception that you're poor. Whereas if you're driving an $80,000 car and have $1,000 in the bank, people think you're rich because you're driving this fancy car. But we all know that a lot of the cars you're seeing people driving around, they're not paying cash for them. I think a lot of the people, anybody that I've met that you kind of know has a lot of money, or you kind of know they have a fair amount of money, typically doesn't. A lot of them you see don't drive the greatest cars. It's always on in the financial forums. Everybody mentions Toyota Corollas, which is everybody that drives a Toyota Corolla has lots of money in the bank. I've talked about cars before. I love cars. Some of them look great, but I would never spend the money on one. Doesn't make any sense. And I think we need to kind of teach that in school. Don't go into, it's nothing like, the average car payment now is crazy. If you look, I sometimes go online shopping for a new car, and then you get all the way, you build the car you want, and then you get to the end, what the monthly payment is, and you're like, close that tab, not going to happen. And people have to not worry about so much what the neighbors are driving, and maybe look at your bank book is better. But that's just and not worry what other people think. And like Jason says, with the internet, there's so much information out there. It's awesome. There's YouTube, there's Google, a lot of stuff you can research and find. Lots of information about investing online for sure. There's a lot of good information, a lot of good podcasts out there, a lot of good channels to watch, and see how other people are doing. Yeah. I guess a question for Sharma, if you're still kicking around, what made you become a bit more money conscious? Was there? You don't have to necessarily answer if you don't want to, but I know some people, like, they might have had, a lot of people maybe have finance, not to say you have finance issues, but I know some people do have issues, and they turn it around that way, or they just have kind of an awakening all of a sudden, like, what am I doing? I'm going to be retired. Like, I'm going to be trying to retire in 25 years, and I have very little savings, and all of a sudden you're like, what am I going to do? So it's interesting to see how people have that kind of awakening, because I think everybody's different in terms of that, but I think everybody needs to save somehow. Yeah, it's tough though, right? That's the hard part, because everything's more expensive. Like, just talking about oranges, like, everything's more pricey, so it does make it harder and harder to be able to put stuff away for the future. It's always like something comes up. You see, you're like, once you start getting steps ahead, and then you're like, something happens where you have an unexpected bill or something like that comes through, and you're just like, there goes that, right? Because all of a sudden the money that you were maybe going to work to put aside has to go somewhere else. Car, repairs or something like that, house repairs. If something breaks in your house, or you need to get even new clothes or new something, you need to spend funds on that you weren't expecting. is always hard. So it makes it hard to save. And it's always hard to, if you have, hopefully have a rainy day fund, but then all of a sudden you get that big expense and you're like, oh, I got to take it out of here because you don't want to put it on a credit card or something like that. That's the worst thing to have to do, hopefully. And what was I watching today earlier too? I'm still watching, I guess the next purchase I do have kind of in mind is I do want to get more Tesla. That's kind of one I've been wanting to build up. And I know with Sharma talking about adding to portfolios and stuff like that, that's one I wish I kind of bought up for a while, but I think I'll add more CDR. That's probably on my next kind of list. I do want to grab more of that. And then other than that, adding more VDY, VFE. Yeah, leverage. It's not for me. I don't. It's too scary for me. And even for example, I wouldn't do it. I'm not necessarily smart enough to do it. There's probably people that are. I know with that is even people that have borrowed. It can go wrong, right? It's bad enough to lose. It's bad enough to lose in the market, let alone, on the leverage end too. And I think, like, for example, I know there's a few I see from watching YouTube channels and stuff like that. There's like the Smith maneuver, or people using line of credit to invest. And it's like, I guess I always thought that was like the worst thing to do. I mean, obviously interest rates were low, but look at it now, right? So if you have a line of credit on your house, before you were paying, I don't know what, 2% or whatever it was, 3%. And it was in the bull market, you're just like, it's like, free money. You make money, covers your payment. But flip that now with rates up so much, it's not looking so good. So I don't know. I'm not a fan of leverage. I wouldn't recommend it. It's not for me. I know that. So obviously, if that's something people want to get into, definitely do your research and be prepared to lose. Scary. And big part to play. Okay, yeah, paycheck. Yeah, you know what? I love these big comments because I have to lift my head up. I kind of did too during that time, because there was obviously everybody knows, right, what happened. You couldn't spend your money, but actually just before that, started to make a lot of changes in my life too. It was health wise and stuff like that kind of started it. So definitely changed habits for a lot of things. And eating out was a big one. Starting to trying to save more money, right? Because if you're living paycheck to paycheck. I also moved the city, changed, like I moved out of the province, stopped drinking. So made lots of changes that way. Just became more conscious of a lot of things. Got rid of a lot of stuff. Just a whole kind of lifestyle change, and that was a big part of it. From that, it's carried over, kept going. Yeah, and I think that's good. I think a lot of people got into investing during like 2020 for sure. That's why the market went so crazy, right? Because everybody was stuck at home making money. And good morning, FC. Welcome. Thanks for tuning in. Definitely good to have you here. And it did. I think it did, especially with the apps, everything else. It was good, and it became easier, right? Simpler for a lot of people to get into it. I mean, that's how I did, right? We get your app on the phone. Makes it very, very simple in the younger generation. Different things. Yeah, I think so. I think you're right. It definitely made it more accessible. And MC's leverage. Yeah, perfectly said. Leverage is a decent strategy in your opinion. Biggest thing is to be prepared. There you go, right? Cuts both up and down. Yeah. So be prepared. There we go. And if you don't, yeah, you have to just obviously do your research if you're doing it. It's not for me. I just know it's not for me. I can't. I don't have I don't have the like I just don't see the I wouldn't benefit from it. I don't think I'm a smart enough investor to really do it. So it would scare me. And it's funny because I'm in these like super speculative, like, but there's people that would probably see my Bitcoin holdings and go, "What, are you crazy?" So and they would probably trade on leverage fine, so it goes kind of for everything. I guess pick your lane, what you like. Yeah. So hearing coworkers give dividends made me jealous. So I did a lot of research and smartened up spending habits and made saving money a hobby. Yeah, it kind of is a hobby, and that's how I kind of look at it too. And that's part of why I started the channel, right? Because it's a hobby. I mean, it's for my future, but it's a hobby, and it kind of gets me engaged a bit more into it in terms of learning what I'm doing, good and bad, right? It goes both ways. There's no there's not necessarily no right or wrong investment. Everybody has makes their own choices, right? My choices aren't for everybody, and everybody's free to do what they want, because at the end of the day, it's their money, right? So however you want to invest is your decision. Yeah. But it is nice to get those dividends and it's the good thing about the dividends that start to as they start to come in is seeing the growth, seeing each month is more and more. Obviously, provided you haven't sold, and provided they they haven't reduced the dividends. But the one example is VFE. I've been slowly building that up, and not VFE, VDY, the Canadian high dividend yield Vanguard ETF, and last month was the most dividends that I've ever received. So it's kind of nice. Like, you see that kind of, you kind of start to see it's like a snowball slowly building. So next month, as long as the dividends may change obviously with that, but next month because I'll have probably invested a little bit more, I should be getting a little bit more. And it's nice to see that. It's nice to see it kind of start to work, even though the market is down, right? But you over the long term, we'll still see that snowball building. And it's kind of neat to see. It's nice to get those emails and notifications in that, like, hey, you got, $30 all of a sudden for the month, so yeah, it's a phone. Yeah. I think that's one thing that's, Wealthsimple's done really good. I don't mean to be a show for them at all. It's just, I found it very easy to sign up. I really started with them on the invest side more because at the time I had an investment. I've talked about it before, but I had, like, this is back from the investment from the job that I used to have, that it was it's locked in and everything. I can't touch it till retirement, and I was paying too much fees. So I was really just searching for somewhere. All of a sudden, you'd get your quarterly statements, and you kind of would look at them, but because you're not really necessarily putting money into it all the time, because I can't, because I'm no longer in that work. So it's just sitting there, and you wouldn't necessarily pay so much attention to it. But then but then they actually got an app that I could use, and I started going in and actually seeing how much each month I was paying on something that I wasn't taking advantage of dollar cost averaging or doing anything with it. And all of a sudden I was like, why am I paying, X amount of dollars on something? There's got to be a cheaper. It just seems too much. So that's when I started researching if there's a better. And I think I probably saw, like, I remember when Wealthsimple had, like, the YouTube ads were, like, literally on every YouTube video. And I think that's when I kind of found out about it. So I kind of looked and, like, okay, well, this, if I put X amount of dollars over here, pay this much fee, my fees are going to be cut in, over half each month. So it's like, then you look at the time, you look, okay, I'm paying less than half the fees. I'm still can't touch it for another 25 years, just in fees alone, it's going to benefit greatly. So I moved it over, and that's what I did. And then I kind of got into the trading kind of side, and then that's when I kind of started the channel for TFSA and went up from there. And MC's higher growth names without leverage versus leverage, stable, slow growth. Yeah. I think a lot of people. I really haven't had a lot of. This is probably the first comment on the live stream actually was about leverage. I haven't had anybody even bring it up in any of the video comments or anything like that asking. And it's we're more like, basic retail investors trying to just get a decent nest egg. We're not trying to do anything smart or tricky on the channel. At least I'm not, and I think that's who maybe probably gravitates towards as subscribers. I think that's what YouTube does. It has a really, really good way of finding a community and an audience of similar-minded people when you start to post these videos about different topics. And I think it's done a pretty good job, because everybody that kind of comments and even join these live streams, we all seem to really be on a lot of the same page. I'm sure if I had a channel about day trading and leverage, everybody that's following me, we would be into day trading and leverage, right? Like it's just kind of funny like that. And so Justin, so you're using Quest Trade. Yeah, that's exactly what was happening for me. I mean, I switched it in when did I switch it over? I switched it in it would have been in 2020. No. Yeah, 2020. It would have been 2020. It's like these years are a blur, right? Would have been sometime in 2020 or early 2021. So I did have some gains. Like I did have some of the gains that came with it. But then I realized, like, if you're looking at it, for the most part, the commission was a good chunk of those. Because it was in a diversified portfolio. But so I was getting some monthly dividends from it. There was some bonds in there. It was like, I can't remember exactly what it was in. I'd have to definitely look it up. But I was literally paying more than what I was getting in dividends in return, even if the market was staying flat. So it's like, that doesn't make any sense. So the way that kind of works, and the way with Wealthsimple, they pay the monthly fees there. Looking at that investment, I definitely get more of my gains back, and my dividends are getting reinvested, because the monthly fee is less than what I'm actually getting back. Like the way the split is, even if I look at it, like even what the bonds are paying, it more than covers the monthly fee. So it's kind of like, that's nice. So it kind of does have some longer term growth too from there. But yeah, so if anybody has investments, definitely check the fees, what you're paying at different places, because it can add up. And I don't necessarily, I think everybody should, at the beginnings, probably have a financial person. But I think what I find with a lot of financial people, depending where they work, if you're going to get a financial planner, you should probably try and find one that's independent, because the ones, obviously, the ones that are working at your bank branch, they're just going to try and sell you their bank stuff. They might be okay. That's the thing, but they're only going to sell you those. They're going to steer you in the direction that they get more commission off of, or the bank makes more money. That's just how that usually works. Whereas if you have maybe someone that's independent, they'll definitely sit down, I think, with you, and hopefully steer you in a better direction. But I don't know. I'm a big person that kind of says, big believer in kind of doing a lot of your own research, right? And learning yourself, instead of just blindly throwing your money somewhere and sometimes trusting somebody else, because as we know, look what happens, right? You're paying more fees somewhere where you could be getting something else somewhere else on your own. if you're savvy enough. For a basic investment, it gets a bit different. Obviously, if you have, I don't know, I mean, obviously, different net worths for people, different issues with with if you have investments with with other spouses, that kind of stuff. It's obviously trickier. So you probably do want to have a financial person, but I think an independent one would be the best way to go to an advisor for sure, separate. Yeah, yeah, that's exactly it. Yeah, yeah, I think so. Yeah, but I think a lot of people are starting to become definitely more savvy, MC, on their own, with all the products that are available. Whether it's, I mean, what did uh, um, um, like Justin mentioned, Questrade and Wealthsimple, and there's even the National Bank one that's free now that I think has a lot of information in there as well, to be able to learn on your own. Um, so, but not a bad idea. Definitely, I think to maybe see an advisor to get the um, just to kind of maybe start off. Yeah, wouldn't hurt. Wouldn't hurt. The hard part too. I know, and I think this is why maybe um, a lot of these uh, like apps are doing so well with younger people is I think maybe younger people are maybe intimidated a little bit, or like investors aren't necessarily like if you're not walking in the door with $1 million, they're kind of like, oh, whatever, we'll give you just go deal with this person kind of thing. You're not getting necessarily maybe the same service. That's not everybody. I'm not lumping everybody into one thing, but I know that can be kind of the 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 feeling that people sometimes get if they don't have a lot of so if you're you know if you're doing it on your own and doing your research and invest using these products, you know they don't frown upon you if you're only able to put in. I mean, if you're starting out and you're 18, 19, and you put in every payday, put in $25, that's awesome. Multiply that over the next 50 years, and you'll build it that way. And I think it's a good way to start with people. And they do, yeah, they do. RSP season at the RSP seasons at the bank, they definitely push those towards. And as everybody a lot of people probably know, it's not always the best product for people, depending on everybody's situation. That's where a good accountant comes in for sure, to make sure that actually makes sense for you and what your tax implications may be. Because for a lot of people, RSPs don't necessarily make sense, depending on the tax bracket, all that kind of stuff. Because the TFSA is kind of like a hidden gem that I think a lot of people don't realize, especially down the road when you hopefully are, when we've hopefully made some money on it and we actually start having, to draw from it in retirement. I think that will be a benefit that a lot of people know about, but I think a lot of people don't take advantage of TFSAs. I didn't, right, for the longest time, because you have that in your mind. RSP, you used to always just think TFSA is for like a high interest savings account. And when I say high interest, I mean like back when it was paying, at least we're getting 1.5-2% on a savings account now, which seems like a lot, but it's, in the big scheme, it's not, but better than what they were paying. And yeah, ETFs have made investing definitely a lot more user friendly and less stressful. I would agree with that. I would agree. Yeah, it does make it easy. The thing about the only thing about ETFs is they're very there's so many, right? MC, there's like, you could go crazy looking at what ETF to choose, because there's so many. It's like, then you're worried about if you make the wrong purchase, make the wrong mistake, because there's literally thousands, right? So that's, I think, where if you look at some of the, but you can search and you could Google it, like what are the top 10 ETFs in Canada, and it'll pop up and it'll start it'll start you in the right direction. And that's exactly it. Used to have to call broker before internet. Yeah. yeah, they had the stock tickers, or you'd look at the newspaper the next day kind of thing. That's basic. I remember in the newspaper you used to have the stock prices for the day in the newspaper. It was yeah, it was insane. And that's what I think I told the story in my live stream MC when I was going to buy Apple stock, and this is back so hindsight is so 2020. I think I could have been retired by now. I was going to take it worked out in the long run, but anyways, I was going to take money that I had savings, and I was going to buy Apple stock because it was the lowest it had ever been. And this was just when I was always an Apple user. I think I don't know if they had done the iPod yet or not, but it was like, I think it was trading at about like $13, like $8 or 13, but I can't remember what the price was. This is back in like 2000, and I was going to buy it. But I had to send away for, I forget who it was. It might have been Questrade back in the day. I can't remember. Or it was maybe through my bank. You had to send for the investor package. And they had a whole bunch of forms you had to fill out. And I started to do it, and I was just like, oh, so overwhelmed. I never did it. So now it's so easy. That's the thing. Like, so easy. So easy. Yeah. And that does the thing. If there's less access, there's like buy and hold. Yeah. And that's what we kind of saw a lot of people like doing the whole game. Like if you watch that GameStop stuff, or a lot of the crazy young investors doing crazy stuff with meme stocks and everything else. That's what makes it definitely different, because it is really easy to do, right? Really easy to do. Yeah. So back in the day, but I think the thing too, like for ETFs and stuff like that, a lot of people if you're into like buying ETFs, a lot of people, those are all really just buy and hold for the most part anyways too. Not just necessarily individual stocks to hang on to. Yeah. Back in the day. As we date ourselves. I mean, it used to be all mutual funds, right? That used to invest in with your, like, back again, Justin, like I said, RSPs. Used to do mutual funds in your RSP before there was ETFs, right? And those had higher fees and everything else. I think a lot of people aren't in. I think that article that we mentioned last week was about how a lot of the withdrawals are coming from mutual funds and more going into ETFs, which makes sense, I guess. Wow, 9 o'clock already. Holy, time flies. This has been a great live stream. Always good comments. I always appreciate everybody coming on. I always kind of learn a lot. It's always kind of neat to see what people are doing, what people are thinking. Definitely enjoy it. It's nice. I always kind of come on without I try and start with a topic, but it's always fun to see where it goes. That's always more fun. And so the shift from fun to slower than thought. Yeah. It's probably, it probably just people probably don't pay attention. I think more people probably paying attention now with things as they're getting their, like, think about it, right? The last 2 years, most people that are kind of in mutual funds are typically, I'm going to assume, mostly at their bank. They're not using their app to trade. They're at a bank. They're putting regular deposits into their thing. It's coming up probably automatically, going into their mutual fund RSP, maybe TFSA and mutual funds, maybe not as much, most likely RSPs, right? And maybe some unregistered stuff. But banks, like they really push RSPs, right? And you're probably not going to pay. They probably, for the last couple of years, probably didn't pay that much attention, because you get your quarterly statement, and for the last 2 years, I mean, obviously this year it's changing, right? So you're going to start to get your quarterly statement, and you're going to start seeing it. Like, you pay more attention when it's gone down, right? Whereas in the past, if it's gone up and you're like, okay, well, it's doing good. Why change anything, right? Now it's going to come down, and you're going to be like, what's going on here? This is probably why they're changing it. Now, whether that's a good time to do it or not is probably not necessarily the best time to do that, but that's going to make some people think to maybe not start, not carry on with certain investments as they get those statements coming in. Yeah, I guess you just have to look at what you're putting into, right? Like anything, look at the costs. Sometimes it's not worth to switch. Like, what's the point? Sometimes if you're happy with something and it works, it's not necessarily, if you're going to save just a little, like sometimes it's not necessarily, it's almost kind of like people, I don't bother, like you see all those, this, if you have a savings account with Save With Your Rainy Day Fund, and I don't see the point in moving it somewhere else to get a save, to get another 0.2% interest or whatever somewhere else for the bonus interest for 3 months and then move it back somewhere else. I just, sometimes chasing stuff is more hassle than it's worth. Yeah. And especially it's like sometimes like too, if you're switching out, like if the fee on the mutual fund is decent, and if you're switching it over to the ETF, I mean, the mutual fund might perform better too. So if it's been okay, it's nothing wrong, right? That's the thing. There's no like necessarily right or wrong investment for people. It's just making sure it's the right one for you. Sometimes. And fees, yeah, that's the thing. Fees are in there, right? So, but if you're not getting the service, and that's kind of, I did mention before why I switched. It wasn't to do with underperformance for me with high fees. It was more so. Also, it started to cut into that, right, as I talked about, but it was also the service. Because when I moved, because I moved out of province, I had to switch advisors, and the new one, because it was a different province for registrations and stuff like that, reached out to me basically to say, oh, I've been passed your portfolio by blah blah blah. I'll be contacting you just to let you know we got it, and I'll be your new advisor, and I'll be contacting you, and to set up and go make sure everything, they do the whole thing, right? Make sure everything's set up how you want it to be. Never got back to me. So that was part of it as well. So not that I have a ton of money, but it shouldn't matter. But yeah, no, it's never fun to pay more fees and not see a value in it either, right? Because had they probably reached out, I probably would still have my investment there, actually, because that's what made me really dig into it. Was like, I'm not really getting great service. And then you start to look at other things. You're like, well, why am I paying this much to this advisor every month, for fees if they're not doing anything and won't even, send me an email link for meeting setup, So that's just how it worked out for that. But there we go. My buzzer just went off. 9 o'clock. It came so fast today. This was an awesome chat, everybody. I think thanks everybody for tuning in as always. Let's do the final housekeeping. If you haven't, I always like to say, if you haven't hit the like button yet, hit that like button before you head out for your day. I do appreciate everybody that shows up. I think we had probably the most comments today as ever. So always appreciate everybody that left a comment and joined the channel, whether it was your first time or your repeat visitor. I always appreciate everybody that comes on. I will have a live stream scheduled for tomorrow. I'll put that back up on the channel. It's Friday tomorrow, right? We made it through another week. We'll see how the market does. I haven't looked this whole time at the market during the stream, so we'll see how we do. Maybe we'll have a little bit of afternoon, a little bit of recovery. Hard to say what's going to happen, but we'll check in tomorrow for the Friday live stream. The Friday live stream is always fun. To finish our coffee, start off the day right, and we'll end it going into the weekend. So thanks again, everybody. Let's put this up just as we go. Don't forget, I think everybody's subscribed, but don't forget to like and share. If you know anybody that might benefit and enjoy the channel, I always like to say, pass on the link to the channel. It'd be great to have any of your friends or family that want to join in. Either they're joining the live stream or checking out the videos on the channel. It would always be definitely appreciated. So it is fun to do, and I hopefully you enjoy it too. And yeah, Stan, have a great day, and Jason, have a great day, and we'll catch you all tomorrow. Catch you in the next one. Have a great day, everybody.